All right, fellow meme stockholders, XMAX Trading here. We're going to go over some interesting DD from seekingalpha.com. So if you haven't subscribed already, consider subscribing to the channel, hit the like button, leave a comment, and let's get started. So Seeking Alpha has said why the Fed has created an amazing opportunity. The stock market has been under unimaginable selling pressure for the last several quarters. The stock market sell-off has been exacerbated by the Fed's actions to reduce inflation. This lays out a vast buying opportunity that only the most skilled investors and traders can take advantage of. The majority will be too scared or stuck in the perma-bear mode. So, yeah, when they say blood in the streets, right? Blood in the streets, then it's, that's when you buy. And everyone's overzealous, you sell, right? That's the theory, at least. But it's about finding the bottom, too. You don't know where the bottom is, either in the market or the stocks, individual stocks themselves. The stock market's taken a beating last year. Absolutely everything has been crushed. Most new traders have quit. I don't know about that. Old ones stopped trading. Hedge funds have closed down. Yeah, hedge funds have closed down faster than new ones are opening. Why are these people are geniuses? Why do they not figure out a way to survive or even thrive in the bear market? I don't get it. As a trader who's been trading over the last 12 years, the cyclical behavior comes to the stock market every once in a while, every so often. Each time the correction occurs, it's always a bit different. Right now, growth stocks are decimated, and many crypto are wiped out. One of the last times this happened was in 2015 when the correction hit so hard that it brought a wave of bankruptcy to mid and small-capped oil companies. This time is different. The crypto field is feeling it as coins such as Terra USD crashed along with exchanges such as Celsius, and so it seems like a correction. Cryptocurrency taking a beating. Here's the bad news and good news depending on what you're invested in. Crypto will likely mark the bottom of the market. Once a certain amount of coins, a certain amount of exchanges go bankrupt, taking billions of dollars down with them like the Titanic, the market will bounce hard. With growth stocks, they're likely to give the best returns compared to value stocks and other asset classes. And they actually mention the meme stocks later on in this article, so keep tuned. In this article, I'll explain why the market crashed, as well as when my best guess is to when we bounce, and as to what stocks will make the killing on the upturn. What caused the crash, take a step back and analyze, but I'll simplify it in a few paragraphs. The market became easy as the government pumped a ton of money in 2021. This is the start of the stock market gold rush, where inexperienced traders turned to cocky traders, making money hands over fist. This is not sustainable. Under the gold rush, there are cracks in how the world worked that will never be the same. Supply chain issues and oil going negative at one point were going to haunt the world as we know it. On top of supply chain issues, something unexpected happened. Russia decided to attack Ukraine, making the supply chain even tighter and energy prices soaring, making inflation out of control when it was already becoming problematic, right? Because the amount of money the Fed was borrowing. This caught many governments by surprise. There's also a global chip shortage. The USA was not the only country trying to mitigate the damage of the pandemic. As a result, inflation became very dangerous, where the only weapon most governments have will lead to a crash in the market and raise interest rates forcefully. Raising rates cuts down consumer spending power. This is what we're seeing now. The Fed actively trying to slow down wealth creation as a byproduct of the market taking a beating. Good news, this can't go on forever. Bad news is we've seen there are casualties right now in the form of crypto, and a lot of fraudulent SPACs will be hit hard. So when your stock's making a new low every day, you're trying to scramble for news just for the lower price and you can't find it. Understand it's the Fed's actions that are leading the markets to get crushed. Sending the U.S. economy into recession for the sake of reducing inflation. What's next? All-time highs in your respective growth stocks will never likely return from many companies. We've seen highs in Peloton, GoPro, Fit, Google, keep coming down. Many SPACs will eventually go to zero, be bought out, or never make noise in the market again. However, the meme stock movement is still alive. They're honest about this. They came out and said it, which means you can never count out a stock like GME, AMC, and now Revlon and Redbox. These types of movements are game changers. They do provide lifelines for companies able to raise off the crazy stock gains. There are many companies out there that will gain 10 or 20x from where they are right now. It will happen. It's just a matter of picking the right stocks. Make sure you diversify if you're planning on buying, and find stocks that don't have controversy or fraudulent behavior, as well as decent cash for a few years. I believe stocks like Palantir, Fubo, Lucid, Greenwich Life Sciences, Fubo, Lucid, Rivian, and Virgin Galactic are huge returns for when the market recovers. Palantir is funded by the government, which means reliable consistency. You always count on the government check, never bouncing. And some bullish news by analysts. Fubo was trading near its bankruptcy and had at least 2 huge cows on the horizon. The English Premier exclusivity in Canada, as well as the World Cup coming for Fubo. On top of that, their cash burn is expected to reduce as they synergize their services to reduce costs. Kind of like AMC, right? Not financial advice. And this life sciences company, phase 3 and 2 trials. Lucid Technologies, Rivian, SPAC. How to play the comeback. The question is, have we reached a bottom? As I've just discussed before, one of the key criteria is bankruptcies that we've seen in crypto and SPAC realm. The real question is, have we seen enough? I think there's a possibility we've seen just enough. At the very least, we're halfway there. The real metric in this scenario is inflation, where the world has seen the worst of it. This is much more difficult to predict because another black swan can always pop out. And the risk is always there. COVID or Russia's invasion of Ukraine or perhaps another invasion, right? However, there are signs we're reaching peak inflation. Gas prices in the U.S. have dropped 21 days in a row, thank God. It's going to lead to a chain reaction to a drop of prices of all sorts of products. With difficulty of timing of such a bottom, I do recommend people do their due diligence and at least buying half a position in the stock market where your favorites are. Conclusion, the question everyone has in their mind is when we finally recover. I believe that we're at least halfway there, if not already there. Crypto is first to tumble, more bankruptcies, as housing market bubbles starts to burst. We're close to a turnaround. Hold on tight. Research and be prepared to make a lot of money if you play your cards right. When the market is ready, you won't have time to buy. Most will be confused in awe and the sheer power of the bounce, as they always are. Where stubborn traders always end up buying at the top. Yeah, we've all been there. This guy has a PhD in computer engineering, Chart Capital. Successfully traded the stock market since 2011. Emphasis on stocks that have a clear-cut future and catalysts that previously went parabolic. Chartleading.com or Stock Education. They are long on all these stocks we talked about. Pretty interesting, guys. All right. Pretty interesting. Leave it on the bottom in the comment section. Let me know what you think about this. It's pretty cool. He said the meme stock. So, anyway, guys, I'll see you in the next video. And later.